Alright guys, so I wanted to make a video about this just to maybe help people understand better why YieldMax ETFs have been paying a bit less, and I've seen that some people are worrying that there is a downtrend in the distributions, and they're not understanding because recently the market has been going up. As you can see here, the S&P in the last month is up 5%, and we know that option plays in those YieldMax ETFs are bullish. So if the market is doing so well, why is YMAX paying a bit less every week? Why has MSTY not paid a $2 distribution and only a $1.23 distribution? So I wanted to cover that topic. Quick answer for people who do not want to watch the whole video is because the implied volatility of the market has been low. So when the market is not volatile, when you trade options, basically you make a lot of money when the market is volatile. So when the market is up 2% one day, then down 2% the other day, when the market is super choppy and every day it moves a lot, that's where you can generate a lot of money trading options. But when the market is stable, even though the market is going up or down or sideways, if the market does not move a lot, the implied volatility, so the volatility of the market at the moment, is going to be lower. So all the option premiums that you can possibly collect when trading options are going to be lower. So that was the quick answer, but I'll dive into the details. But before starting that, I just wanted to go on my YouTube dashboard here and thank you guys for subscribing and for supporting me. So this one is pretty crazy. Last night when I went to bed, I think I had 25 subscribers. And right now, like every morning, I kind of look at my YouTube and I reply to comments, whatever. And I refreshed my app and I was at 45 subs, I think. And I thought the app froze or something and I couldn't believe it. And right now, a few hours later, I'm at 81. So it's pretty crazy. The last videos have been going nuts, and like the comments have been so positive, and like I don't know what to say. Just thank you so much, guys, for the support, and it really motivates me to keep posting more videos. So, anyways, that's it for that. I'm done saying thank you. Let's get into the video. So, yeah. So, like I said, the implied volatility has been low. So, as you can see, when the market was crazy here, it paid a 17-cent dividend, 16, 19, 18, 21, and then since then it's been going down, 17, 18, 14, 15, and then 15. And people are worried, and then same thing for MSTY. MSTY is like the favorite, the highest paying one that everyone thinks that they should be paying the most. As you can see, they paid a $2 distribution in May, which was crazy. And then in June, a $1.40, which was still very good. And now a $1.20. So I see a lot of people on Reddit and on X saying that they're worried, not because they're paying less or because they think that YMAX is not performing, but it's just that the fact that there is kind of a downtrend where it's going down and down and down. And if that keeps going, does that mean that YMAX is going to start paying super low distributions and not be high yield funds anymore? And the answer is no, it's not a downtrend. So like I said, options pay a lot of money when the market is volatile. When the market is less volatile, even though it's going up or down, like for now it's going up, but as you can see, it's pretty linear. Like there's no choppiness and everything compared to 6 months ago here, how super choppy it was. Here, the implied volatility was much higher than now. But here, as you can see, it's pretty much going up in a steady state. And that's why right now trading options is not generating as much money as it was before. So this is the whole implied volatility of the S&P 500. So this just covers the whole market. And as you can see here in April, when the market was crashing, the implied volatility was at 100%. So when you were trading options back here, that's where you would generate the most premium, but that was the most riskiest moment to trade. So basically how implied volatility works, if I take this silly balloon example, it's a bit like gambling. Like if every single day you have to bet with your friends on a balloon, if it was going to pop or not, when the implied volatility is low, it's basically like using a small tiny pump. So when it's low, the pump barely blows the balloon on each pump, basically. So it's a less risky market, less volatile, So the reward is going to be lower, and you're gonna be less stressed that the balloon is going to pop after five pumps. But if on the other day the implied volatility is super high, and you see that the balloon pump is like an industrial pump with an engine that is blowing like 10 liters of air per pump, and you have to bet if the balloon is going to pump after 5 pumps, then first of all, you're going to be more stressed. And your bet is, if you say that the balloon is not going to pop, the risk that you're wrong is higher. But to compensate for that, the reward, if you are right, is going to be higher. As well. It's like the casino, you know, if you're betting on a single number on roulette, there's a much higher risk, but if you win, you do collect more premium. And it's the exact same thing with options. When the risk is high, the reward is high. When the risk is low, the reward is lower. And this is exactly what's happening right now. As you can see, the implied volatility has been trending down. And at the same time, you can see that all the YieldMax ETFs have been paying a bit less because they cannot force income. They cannot pay you fake distributions if they're not able to generate premiums. So that is the only reason why. It's just in moments of low IV, low implied volatility, you can expect the payouts to be lower. But is that a bad thing? Not really, because the market is still going up. And if you look at YMAX, for example, the price of YMAX is still going up. The price of these single stock ETFs, if the underlyings are going up, they're also going to go up, you know. So we can still capture growth, we can still stabilize the NAV, but we might collect a bit less premium, and that is fine. You know, you can't ask the YieldMax team to kind of generate premium out of thin air. You know, you need some high IV stocks to be able to generate some high premium. And this is why OT has been getting so much love recently, is because if you go on OT's page, every single day you look at their holdings, at the bottom of the page, they update their holdings, and every day they make calls, and they probably have screeners, and they rotate in and out. So they probably just use the highest IV stocks at the moment. They trade them, they milk them. When the IV drops, they switch. So that's how OT is able to be different from YMAX or from some single stock ETFs, is that they don't rely on specific stocks. They just screen for high IV. When there's a high IV, they pull it into OT, they generate their income, and that's how they're able to pay you 9 cents a week, even though the market's IV has been going down. So this is the S&P. Now let's look at QQQ, which is the NASDAQ. So same thing for the NASDAQ. As you can see, it's been going down, and these are the top tech stocks. And now let's go for MSTR, which is MSTY. And as you can see here, same thing for MSTY. The volatility right now has been very low compared to here, where they paid higher distributions. It was going up, and as you can see, right now it's been pretty flat recently, and in the previous month it's been pretty low. So that's why in July the distribution has been $1.20. Another thing you can do is you can look at the VIX index, and as the VIX index is basically the volatility index, and every time there's a big event in the market, and let's say there's a very bad news and the market starts crashing, and then it recovers, it crashes, the VIX is going to spike. If we look at the 5-year chart, here the VIX really spiked, and usually when the VIX is very high, it's kind of a good moment to buy. Like, this usually happens when there's a crash and stuff like that. So as you can see in April, when the market crashed, the VIX was so high. If you go to max, if you go here during the COVID crash, the VIX spiked up even higher. And here in the 2008 crash, the VIX spiked as well. So when the VIX is very high, this is where there's the most uncertainty in the market. This is where the option traders are going to make the most money if they're right about their trades. And this is where you can generate the most premium from options. So yeah, that's the reason why recently YMAX has been paying less. So it's not on their side, it's not their fault. It's really that currently the market conditions have been pretty good. The market has been stable and just going up every single day, a few points. The S&P has been climbing steadily, and that's why like the YieldMax team are not able to generate as much premium. All right, last thing, guys, before I end the video. It's already 10 minutes. So here I asked ChatGPT for some explanations on how the IV means implied volatility, affects option traders. So if the IV, they just give me an example, a generic example. So if a stock is worth $100 and the IV is low, a 1 month call option might cost $2. And for the same stock, the same price, the same option, everything, but the current IV of that stock is high or the current market conditions are uncertain, then the same option will cost 3 times more, so $6. So with the same play, with the same option play, just because the market is riskier at the moment, the market conditions have more risk, more uncertainty, you will make 3 times more money. So this is exactly what the YieldMax team is doing. They're trading options. If the IV is high, they'll trade the same options, but they'll be able to generate more money. And if the IV is lower, then they'll make the same plays, but they won't be able to generate money out of thin air. And here, too long, don't read. High IV equals juicier premiums for sellers, more expensive for buyers. Low IV equals smaller premiums. It is safer to trade, but you have less profit potential. And then I said, can you generate a simple chart to show how IV affects option premiums? Option premiums, basically the money they generate when they trade those underlying stocks. For YieldMax, for Roundhill, for Rex shares, for any of those option 0DTE ETFs. So as you can see, if the implied volatility is super low, the premium is going to be low. And if the implied volatility is high, then the premium is going to be to the max. So as IV increases, more expected movement, the option premium becomes more expensive. Option sellers can collect more premium when IV is high. Option buyers pay more when IV is high and risk losing value if IV drops. So there is a strong relationship between volatility and premium price. And if you've made it to the end of the video, guys, thank you for watching. And just to summarize, essentially what's happening right now is that the implied volatility of the market has been lower. And this is why YieldMax ETFs have been generating a bit less income, especially for YMAX, since YMAX hold a bit of all of their holdings. If all of their holdings have a lower implied volatility at the moment, then YMAX is going to pay less. So yeah, I just wanted to cover that. So there's nothing to worry about. MSTY is still paying in the 70% yield and YMAX is still currently in the 60%. So nothing to complain about. We might see some lower yields in the next week too for YMAX, and because there has been some US holidays where the stock market has been closed, so that is one less trading days too. So when we have holidays, obviously they have one less trading day under the belt to generate income. So all of these factors. So basically, guys, nothing to worry about. I think currently the market is just not as volatile, and I think it's also good for investors because our portfolio isn't as choppy, and as long as YMAX keeps generating premium or income for us in the 50+% yield, I think I would not complain. So yeah, guys, just wanted to cover that, and thanks for watching, and until next time, take care.